हाय इन्वेस्टर्स, वेलकम टू SOIC। तो आज की इस वीडियो में हम लोगों ने मिस्टर हिमांशु शर्मा को होस्ट करा था फॉर अ डिटेल सेशन विद दी SOIC ट्राइब मेंबर्स। तो SOIC ट्राइब मेंबर्स के साथ साथ हम बहुत सारे ऐसे डिफरेंट डिटेल्ड ऑफलाइन सेशंस भी करते रहते हैं। एंड इन वन ऑफ दीज सेशंस वी होस्टेड मिस्टर हिमांशु शर्मा, हु इज़ एक्चुअली अ CMT एंड हैज़ मोर देन 10 years ऑफ एक्सपीरियंस इन टेक्निकल एनालिसिस। तो टेक्निकल एनालिसिस जब हम इंटरनेट पे देखते हैं तो यूजुअली काफ़ी सारी ऐसी चीज़ें मिलती हैं जो एकदम टू द फैक्ट्स नहीं होती हैं, तो फ्रॉम प्रैक्टिशनर्स नहीं होती। तो यहाँ पे जो हमने सेशन करा था मिस्टर हिमांशु शर्मा के साथ, तो ही इज़ अ प्रैक्टिशनर ऑफ टेक्निकल एनालिसिस। एंड इस सेशन से आपके लिए क्या की लर्निंग हो सकती है कि इवन इफ़ यू आर अ लॉन्ग टर्म इन्वेस्टर, डेफिनेटली यू विल लर्न समथिंग न्यू फ्रॉम दिस वीडियो। साथ साथ इस थ्रू आउट दिस वीडियो में मल्टीपल बुक्स के रेफरेंसेज हैं। अगर आप टेक्निकल एनालिसिस सीखना चाहते हैं, सो दिस इज़ वन ऑफ द बेस्ट वीडियोज दैट यू कैन वॉच, because all these offline tribe meets that we do with SOIC tribe members, our idea is to impart knowledge। and ये हमने सेशन आज से थोड़े टाइम पहले करा था, एंड अब हम अपनी जो यूट्यूब कम्युनिटी है इसके लिए भी ये सेशन लाइव कर रहे हैं। एंड साथ साथ अगर और भी हम बात करें तो मिस्टर हिमांशु शर्मा के का जो लाइक प्रैक्टिशनर एक्सपीरियंस है टेक्निकल एनालिसिस में, यू कैन ऑल्सो चेक हिज ट्विटर हैंडल चार्टिस्ट के नाम से, बाय द नेम ऑफ चार्टिट्यूड। इट इज़ ऑल्सो देयर इन द डिस्क्रिप्शन बिलो, एंड यू मस्ट फॉलो हिम ऑन ट्विटर एज वेल, बिकॉज ओवर देयर यू कैन गेट मल्टीपल आइडियाज़ कि कैसे टेक्निकल एनालिसिस लाइव केस स्टडीज़ के साथ आप कर सकते हैं। एंड एक्चुअली में ही इज़ अ प्रैक्टिशनर ऑफ इट। सो विद दिस लेट्स स्टार्ट द वीडियो, एंड टुवर्ड्स द एंडिंग ऑफ द वीडियो आप लोग मेरे को जो इस वीडियो से आपकी की लर्निंग्स होगी आप वो भी ज़रूर बताना। एंड ऑल दीज केस स्टडीज एंड ऑल दीज लाइक ट्राइब मीट्स वी कीप डूइंग as a part of SOIC membership. If you want to register for the SOIC membership, even for that the link is there in the description below. With this, let's start.
Good afternoon to all of you. So technical analysis, basically the aim of the technical analysis is that you identify the trend as early as possible and then you ride the trend till you get the reversal signal. This is the basic definition of technical analysis. So this is about me. I resigned from my government job in 2019. It was basically here only Ministry of Urban Development near Udyog Bhavan. So I'm after 3 years standing at a very nearby place. So I completed my CMT and I am certified by IFTA as Certified Financial Technician. So this is what I say, Charles Dow is the father of our field. That's why you see the American stock market index Dow Jones is in the respect of his name, Charles Dow, and his friend Edward Jones. He was writing in 1890s about technical analysis. So it's the study of market action as per the book by Sir John Murphy. It is the study of market action primarily through the use of charts for the purpose of forecasting future price trends. So that's what I said. Aim is to identify the trend as early as possible and ride it till it reverses. Now, let me give you a fair perspective of what is a chart. There is a transaction between buyer and seller at every second of time when the market is open. As long as the transaction is completed, the price is printed on the chart. So most people say it's some sort of a black magic, or there are many myths revolving around charting platform, or maybe like this. You see candlestick chart in media channels, or you must have seen bar charts or maybe point and figure charts. They are just the representation of how you will take a note of the price between the buyer and seller, transaction price. Very simple example, when you go to a nearby grocery store, you get a receipt of your transaction. So on that receipt, it is always mentioned date of the transaction, time of the transaction, price, and how much quantity you bought. Similarly, we have to get some sort of recording process of those transaction prices. Like you sold a stock to me at, let's say, 110 rupees. This time, this second, this is recorded. Earlier in early 20th century, when there were no computers, it was done by hand. So Sir Jesse Livermore was doing all this paperwork by hand. He was recording the transaction price. He was noting down the closing price. So you must read a book, whatever book I will be saying, you have to write it somewhere. How to Trade in Stocks by Sir Jesse Livermore. This should be a book you all must be reading. It's, I think, 100 pages document only. So keywords in technical analysis, you have to identify the trend at the earliest, and you must have an exit criteria also at the first signal of trend reversal. I have seen many investors, like they come to me, they say, I was holding this stock, it went up 400%, 500%, but later on it is back to my buy price. I didn't exit at all. So you may see 50 to 100, 200 examples. I can say you Zoom Communications, Peloton, or maybe in American market, you see there was one stock like DocuSign, Roku, they made 200, 300% gain, but now they are back at your buy price. So you missed out the entire profit you made. So that is why on our chart, exit signal is very important. Now, another important point before I start is that when a price is printed on the chart, when there is transaction happening between buyer and seller, now different kind of market participants comes into picture. The shortest one is the intraday trader. What he will do is he will buy and sell within a day, because as long as the price fluctuates, you get opportunities. So he will be buying and selling within a day. Now comes the swing trader. Now swing trader will say, okay, because the stock is moving up, forming a higher high and higher low pattern. So swing trader says that I will capture one swing of this portion and I will churn my capital faster in other opportunity. That's what I think Ishmohit also teaches you in a low margin business. Your capital is your inventory. So you churn it multiple times to generate higher, what you say, ROCE, return on capital employed, ROS ratio. So then you come to the positional trading part. In positional trading, what happens? You are holding a stock for 6 to 9 months. That's what basically I do somewhere between swing trading and positional trading. In positional trading, let's say Tata Power started its journey at the price of 65 rupees. It moved till 280 on the chart. So you are capturing the entire move. For example, the second example may be Laurus Labs. So it started the journey from 80 to 100 rupees. And then it went till, I think, 700 rupees. It gave you the exit signal. So in positional trading, you are capturing this entire move. You are holding the stock for many weeks to many months, and you will be getting out at the first sign of signal. That's what basically these days I think investing should be, because what happens usually, many stocks like Roku, DocuSign, or in India also you have examples like Indian Energy Exchange, or many investors were sitting in Yes Bank also at some period of time. So what happens usually, when you get the exit signal, you must exit maybe some portion of your holding, because as a fundamental investor, you may be having 30 to 40 stocks in your watch list, right? So you have enough opportunities available in the Indian market. In Indian market, there are 7,000 stocks. In Indonesia, where I trade, there are only 800 stocks. Though there is nothing to do. If you go to Uganda, only 11 companies are listed. So what will you do there? But in India, you have plenty of opportunities. So once you make money, you must learn to protect your profits made in a single stock. Otherwise, what happens usually? Sir Charles Kirkpatrick wrote a statement in his book. A 50% loss can wipe out a 100% gain. You made 100% in a stock, from 100 to, let's say, 200. You are holding it. A 50% correction came, your entire profit is gone. It's back to 100 now. So similarly, 50% loss will require now the stock to double, to even break even. Like you bought it at 100, it moved till 50. Now you didn't cut your loss. So 50% correction now needs that stock to move back 100% to break even only. So if you're see, this is very important statement by Sir Perry J. Kaufman. Risk and reward are not proportional to each other. Your reward can be 500%, 600%, 1000%. Respect risk, because risk has to touch only 100%. So even if your profit is 1000%, risk can only go up to maximum of 100%. So 100% and it's zero. So you have to respect the risk part element in it. That's why I have mentioned that exit criteria is very important. So chart is nothing record of transaction. I already explained to you that when you go to a grocery store, the same example. So you are recording that price on the chart in the form of maybe candlestick, maybe bar chart, maybe line chart, Renko chart, Heiken Ashi. No matter how, what method you use, you are just getting the same source of information. what is the transaction price. So often fundamentals take time to reach the investors, and by that time price had already declined from the top. Now that's important point basically. Now all of you are fundamental investors, so I feel fearful to keep my point here because I don't know, like it may offend you some, but let's keep it very simple. Fundamentals, what happens usually, sometimes a company is sleeping for 6-7 years. Fundamentals are great, business is great, but the stock price is not reacting at all. So what will you do in that case? For example, Jubilant Food is one example. You have the example of Syngene International in India. It's a fundamentally great business, but it's sleeping for almost 2 years. Now in this period, your capital is not giving you any advantage, not deployed at a place where you are basically losing on the opportunity cost. You have many examples like HDFC Life. The business may be great, the story may be great, but the stock price is not performing for a prolonged period of time. Similarly, in Indonesian market, many examples there. Kalbe Pharma, Unilever, Hindustan Unilever, you see for I think 8 or 9 years, it was a sleeping stock. Reliance Industries was sleeping for a prolonged period of time. So fundamentals, now on the contrary, sometimes the stock will correct from the top with heavy volume, as we will discuss in many cases. What happens? There is no underlying change in the fundamental. So fundamental information will take time to reach out to you. It takes time because 3 months or 4 months or sometimes 6 months time lag is there until you realize, okay, the story is now changed. But the price has already declined 50, 40, 50, 60% from the top. That is why where the charts come handy in here. So this is the example, the recent example, the most discussed talk on social media now in US market. You see that this is the monthly chart. So this is a candlestick chart basically. So you see one candle is 1 month of record. I think some of you must be new to charting. So white candle means the price closed up. Black means the price closed down for that particular month. It's very simple. These are like shadows of the candle, which we call wicks. So if you see here in this candle, so this long wick suggests that the price went down till here, but it came up and closed somewhere here for this month. So this is the wick of the candle. So you see now the stock corrected from 355 to $5. So it's in a too much hurry. Like I think 7-8 candles destroyed almost 80% of the gain you made. Only 7 to 8 months of that activity. So if the information is reaching out to you maybe 3 or 4 months later, your stock has corrected, if you see at the top, from 355 to 180, only in 3 to 4 months. So your entire profit is gone. I think I'm assuming you may have taken entry somewhere here after COVID, because this was a COVID fall. The stock went back up. You must have taken entry somewhere here, or maybe if you're a great fundamental investor, you must be holding somewhere here if the story is good. So within 3 to 4 months, the stock is back till here. So just a question to you, like I posted on Twitter also, if your gain is 400% and the stock corrected 50% from the top, how much are you left with? Like you may think later. So this is another example, Roku in the US market. This chart pattern I will discuss later. This is the double top pattern. In monthly chart, this is the monthly chart value. The stock is back at the same level. In fact, much lower than the post-COVID buy point in here. So that's another example, right? Yeah. Indian Energy Exchange is the Indian example now, the Indian stock. So you see now the stock moved up. Sequent Scientific, one more example, DocuSign. This is Meta platform. So I haven't got the updated chart right now of Meta platform. So I don't know exactly what's the price right now, but if you are holding it, you should have exited somewhere here, right? So we'll be discussing how you get the exit signal. You must have protected your gains now in here, because the stock will give you the opportunity once again when it forms the base, or otherwise you get the another opportunity and you churn your capital this way to generate much higher return than you're generating right now. So this is a book basically written by Sir Robert Wigan, and his book is more inclined towards fundamental investing. But he's discussing about, in many places, about technical analysis tools in his book. So you must read this book. So fundamental investing is all about identifying a great business. That's what you do. First, you analyze whether the business is great to be invested or not. And then you calculate the fair value. That's what we call the intrinsic value. And then a fixed some percentage below intrinsic value, you tend to buy the stock. That's what we call it margin of safety. In chapter 22, Sir Benjamin Graham has discussed in his book, Security Analysis, Intelligent Investor also, margin of safety. But what happens that, okay, you analyze that this business is an undervalued business, fine. But it's your analysis, not the market's opinion right now. Try to understand, you as an individual investor sitting in your room has identified that this business is undervalued. Fine, this is undervalued. But what is the catalyst that will change the perception of the masses? Because you alone thinking it to be undervalued is of no use. The price has to move for you to make money. Price will move when everybody will come together and think, okay, this is the catalyst in the company. For Indian Energy Exchange, it was power trading. For Bombay Stock Exchange, there were many examples, Laurus Labs, like the market share in the HIV/AIDS category. Then many examples in the market. Many times you will think the business is undervalued. Now, Suntech Realty went down to 145 rupees, the real estate player of Mumbai. The stock became so undervalued that time that 180 rupees was just the inventory divided by the number of shares for the company, Suntech Realty, a Mumbai-based builder. So the business is undervalued. You bought it. Now, the perception of all the investors alike should change towards the catalyst. Like they should get the catalyst for the price to move. That is where technical analysis comes handy, because there are two options. You got it undervalued, you bought it. Second option is you wait for the price to react. You wait for the volumes to kick in so that you are now sure that institutions or maybe retailers are now getting interested in this story. And there is a catalyst which is completely out. You save on that time, because undervalued business can stay undervalued for a prolonged period of time. Now, these days, what happens? When you buy a business which is undervalued and it moves quickly, you get an overconfidence bias that, okay, I am a great stock picker and the stock moved quickly. But there are plenty of examples also wherein the undervalued business was sleeping for 6 years or 7 years. Like you see, Aarti Drugs was one case. The stock didn't move for 6 years almost in a range, and it moved 400% immediately when it came out of the range. So this was one case. You see, this is the monthly chart. I'm using TradingView software. If you are a beginner, you can log in for free on TradingView and scan for the global charts. So you see, 6 months, the stock price was sleeping in here. So you have one option. You analyze it is undervalued. Fine, it is undervalued. But what is the catalyst here? And will everyone think the same way as you are thinking? Is it undervalued? And then the buying kicks in. So the second option is you have is let the price come out of this range which it is forming. So as soon as you see the longer basis leads to very stronger breakouts. When the stock consolidates for a prolonged period of time and it comes out of the range, it's a very strong breakout. It happened in the case of Bombay Stock Exchange chart. It happened in the case of Tata Power also. So now you see here, that's a 400% jump in just 5 months. So, and then as usual, that after this move of 500%, the stock has to sleep for months to digest the gains. So that's where other forms of tools comes in, like stop loss, technical time-based stop loss. That will be like more advanced thing. So you got my idea that undervalued business can stay undervalued for a prolonged period of time. United Spirits was one example. Now BPCL is one business. If you open the chart for 6 to 8 years, stock has done nothing right now. So this is Syngene International, the recent example now in here. So the stock is great. Mangalore plant of API production will be active. Everything is fine. Management is good. Management may be good. Now you see here, the stock is sleeping for 2 years. Now this is not ordinary period. This period is the COVID bull run, where even many stocks moved up 400, 600, 700%. And you see here, this stock for almost around 2 years now October 21 to this month would be like beginning of the third month of sleeping stage. So what are your options here? This business is great, everything is fine, but price need to move for you to make money. So that is where, like, you have an option, you can buy it when it comes out of this range. So you can use your capital elsewhere during this period of time. That is where you can save your opportunity cost, like basic economics. So this is Kalbe Pharma chart. Indonesian, it's a competitor of Nestle in Indonesia. You go to any supermarket store, you will find the products of Nestle and Kalbe aligned together in every mall. So you say 6 years, the stock didn't give you any return, almost 6 years. This monthly chart from 2014 till 2022, almost 7-8 years, stock didn't do anything. Now it comes out of range. Now it's the right time for you to purchase the stock. And as anticipated, the stock started its journey from almost 1800 level to 2100 in a very small period of time. So this is the updated chart now. When you buy in the range, now you start getting some return. Otherwise, now those people who do not use charting at all. I'm not saying forcefully to use it, but some people do not use it. Now, in this chart, and there is one government bank, Bank Mandiri in Indonesia. If you open the chart, if you have access to TradingView, the stock was sleeping for 5 years. So someone was holding the stock for entire 4 to 5 years. Now you are not using the chart. So a lady, when the breakout came out, she exited. She said, enough of it. Now 5 years I am holding with no returns. So when the stock started coming out, she got frustrated. Okay, mera bhav aa gaya. It's okay, goodbye. Because many investors, many traders who do not use, they are waiting for their price to come back because they are sitting in loss. Now you will think of making money when the stock is above break even where you bought it. If it is below that, forget about making money. You will be thinking, mera bhav aaye pehle, so I should exit from this stock. So when it was the right time for the stock to perform from 9,000 level to almost now at 10,000, 10,500, she already exited. And now she is saying that, okay, I exited, now it started moving. So this is the common saying, like, when I exit, the stock starts moving, because you are entering and exiting at the wrong price. So this is Hindustan Unilever chart. Now you see here, this period 2001 till 2012, for 12 to 13 years, stock hasn't made any money. Now you can argue, you can say someone is holding here maybe. So you see from 71 to almost around at 230, 240 level. So it's almost not even 4 times in 7 years. So, I mean, for you, it may be a great return, like 300, 400% in 7 years is still a phenomenal return. But you compare it with the opportunities other stocks may have provided you during this period of time. So you see here, almost since 2000 till 2011 and 12. So you see 12 to 13 years, no return. And after that, it came out of that range. You enter here and you capture the entire move, right? So that's how you save on your time, because again, great business, everything great, but it may stay undervalued. So that's why you say many schools of investing also sometimes have those periods of less than par returns. Reliance Industries was one another example. You see this period from 2010 till 2016. If I compare it from this region 2008, okay, this was a 8 crash, it came back up. Then you see since 2009 till almost around 2016, 7 to 8 years of no return. So recent examples also, so many: HDFC Life, Syngene International. Now people are stuck in the stock Indian Energy Exchange. So whether the stock will come back to regain the glory or not, you are not sure. Also, in most of the cases like Mastech or Persistent System, if you open the chart, the stock made a move of almost 10x. Mastech made a move, I think, around 300, 400 to 3,000. Now, many have missed the bus already. They didn't invest in it. The stock moved up 10x, even at 600, 700, they missed it. They thought it is now overvalued, or maybe it ran up so high, they missed it. Now the stock, when corrected, so you must look for a fresh opportunity in these kind of stocks, because what happened, they have made a move of 10x. It is exceptional that they will break out and again make you 10x. It's rare, very rare. So you see Mastech persistent, even though you may buy, but you cannot expect that those phenomenal returns that they gave in their 1.5 or 2 year period of time. So now you see the young age companies like Rainbow Children, or you see these new companies are coming up where you make money. Instead of going back in those same old leaders like Loris Lab made a move of 600% already. So to expect it to go back above 700 and again make 7x move, 4900, it's very rare. So you must deploy your capital in a new opportunity immediately, because after every crash or correction, you will find new leaders kicking in. The old leaders will not participate in the rally again. Exit is important. Like I already explained you, 100% gain can be wiped out. So many investors have, like everyone has an entry plan. So exit plan is what they do not have. So entry, everybody knows, like some will buy even though the stock is moving up or has moved up. Like some will buy CDSL around at 1300, 1400. Tata Elxsi, one of my known one, is now buying at 10,000 rupees, 10,500, thinking that the company is very strong. Now the stock corrected till 6,000. So no matter the business is, even in a fundamental investing, you say no matter how great the business is, if you are buying it at a very poor price, so your investment is almost nil. If you are buying Bajaj Finance at 4,800 before COVID, you haven't made any money yet. I think it's now at 6,000, 6,500 level. This book you must read, Technical Analysis by Charles Kirkpatrick and Julie Dalquist. Or you see here, business dynamics are changing faster. So what happened? You plan for a 2 or 3 year vision. I mean, that's my advice. That's what I follow. I think for 2 year or 3 year in terms of when I'm following the price. I don't think of a decade now, because business dynamics are changing very fast. So you read a book by Sir Peter Diamandis, The Future is Faster Than You Think. So if you read the book, they are discussing many exponential technologies that are converging together. So tomorrow it might be possible that a new tech comes and your business is out of the park, which you analyze. So have a view of 2-3 years and then you continue the journey will there. So what you as an investor can do, you can open a price and volume chart. Basically in technical analysis, don't go too deep into it. There are 500, 600,000 indicators selling in the market. And there are many tools which will create analysis paralysis. So keep it very simple. Price and volume chart is what you know. What is price? I already explained to you. Volume is number of transactions in a day between buyers and sellers. So any stock, you open the chart, you are fundamental analyst, you can check the chart of Varun Beverages, which have made money for you. You can check the chart of Rainbow Children. You can check Loris Lab when it moved up, Balaji Amines, Alkyl Amines, and CDSL, BSC, Tata Power. You open the charts when the price was moving up, and then you open the volume. So you will see that every chart will have volume accompanying. Whenever the price moves up, volume is very high. So it's basically institutional investors' entry or the strong hands who are buying that stock. Mirza International, Phenotex Chemical, they are recent examples. Elecon Engineering, there are many examples. You can use TradingView software. Moving average, which we will apply, is 200 days. My honest recommendation is, if you are an investor, don't open the daily chart. Just open the weekly charts. Don't go to daily. Daily will be like too much noise for you to handle, and you will be forcefully pushed out of your holding. So don't open the daily chart. Just open the weekly chart. Apply 40 period moving average on it. What is moving average? I'll explain. You just need a good stock screening software. There are plenty of them available in the markets, because you need some screening. That's what you also do, like in fundamental investing, cash flow screener, earning screener. So what happens usually, whenever a stock, there is a concept of stop loss in technical analysis, time-based stop loss. Usually there is no defined time period in any book. In technical analysis, what happens? Suppose your stock, let's say you decided 6 months. So beyond 6 months, if any stock in your portfolio doesn't perform, you will maybe get out 50%, you will trim it and will put that in another winner in your portfolio, which is moving up and coming after a base. There may be some 1 or 2 names in 40 names. So this way you will be churning your portfolio, allocating the capital smartly, So you come out like Aarti Drugs wasn't, again, I think pre-split, it moved till 32, 3600. So then it slept for 4-5 months. So if you get out 50%, you will avoid in case the stock falls down. You also avoid losses. And this way you ride onto your winners basically and exit from your losers. Start trimming it after 6 months.
If we want to use a pyramid kind of a thing, then also we can use, let's say we have a holding of 20, 30 stocks,
yes,
and we want to pyramid. Technically, we
yes,
can do it pyramiding, I mean, fundamentally also, depending upon the results, etc.
yes, yes, sir.
Or some news.
Hmm.
But technical analysis also we can use is, let's say I'm holding X stock
Yes,
and
sir.
it's about to break out.
Yes, sir.
Then I can add more or it's
Yes,
breaking
sir.
out.
Yeah, in TA also we do, like I will be explaining on the chart, there are some levels where you add on to your share. Like you bought 100 initially, you bought 50 more at the next level, 25 more at the next level. Why we recommend this? Pyramiding is of 3 types basically. One is like inverse pyramiding, 100 you bought, then 200, then 400. This is usually not recommended because your average price goes up too high. One is the horizontal pyramiding, 100, 100, 100 you buy. One is the pyramiding, which we call, where the term comes from, pyramiding, because you're buying 100, then 50, then 25. That way, you are not buying at an expensive price, and also you're not moving your average price too up. Like you bought at 100, so average price may reach till 120 or 115. So you will buy little when it goes up. So trend is basically, Sir Charles Dow wrote in 1898 in his work, you are watching the ocean, like you're too close, ripples, and then waves, and then tides. As an investor, you are interested in tides, the broader view, broader trend. These days, people are making mistakes that they are going too deep in day-to-day fluctuations of the stock price. That will not help you. If you're an investor, you are better off just looking at the chart once on weekend rather than watching it Monday to Friday. So it will be a mess for you. So you are interested in tides, or maybe the wave, not going too deep into ripples. Trading is glamorized basically. Intraday and swing trading is glamorized. So you have to focus on the primary trend. It is very simple. Just open the weekly chart, 5-year weekly chart, 5-year data. You bring a kid in front of the computer screen. He will tell you whether the stock is moving up or down or sideways. There are only 3 trend directions possible. You go and buy onions tomorrow in the market, either the price will be up, down, or same price as yesterday. So uptrend, downtrend, or sideways. So why am I simplifying? Because there is a book written by Sir Stan Weinstein. It talks about stages, 1, 2, 3, 4. So now these days people come and say, is it stage 1? Is it stage 2? Don't make anything complex. Make it very simple, either uptrend, downtrend, or sideways. Just 3 terminologies will help you. You're not interested in short-term fluctuation. This is policy bazaar, clear downtrend. So anyone can say it's a weekly chart, so don't touch it. Now, many are interested to buy even this. Nykaa, Paytm, they think that they are buying cheap, but cheap is not always the best. So Yes Bank, many were, I think 1 year before, 2 years before, they were interested to buy. So many penny stocks have the same stories. Like many got delisted, and many were like, went to there is a list, dirty dozen list submitted by NCLT to to I think the tribunal which were handling the cases. So there are 12 companies which became penny stock. Few of them become like Ruchi Soya. Otherwise, most of them you will lose your money, you will lose your capital. So cheap downtrend, no, you shouldn't be interested in it. So this is the up now. This is 40 period MA on weekly chart. This was the COVID fall. This is the COVID fall. Now you see here the beautiful chart, Varun Beverages, not even giving you one time the exit signal. Someone who bought here. See, one thing very clear, every strong stock will wait for some months or weeks. It will give you either this diagonal down sloping line or the horizontal line. If the line is like this, there is no entry point for you. So hold it peacefully. When the stock is in an uptrend, it will be diagonally sloping down or diagonal or a horizontal line. like this, you see the third time. I'm not going deep into pattern. This is cup and handle pattern. I'm not going into deep into it. So now you see here, this was your first entry. If you missed it, you just draw a horizontal line from here. You can buy somewhere here. And then you see, this is the 40 period moving average. What is moving average? It is the average of the past 40 weeks closing price. Because price is fluctuating too much, up and down, up and down. You need a parameter, you need a number. Okay, this is the past 40 weeks moving average. So this is a red line drawn on the chart, earlier done manually, now by computers. So as long as this moving average line is sloping up and the price is moving up, there is nothing wrong in the stock. Keep on holding it. I will come to the selling part, selling climax. That's the exception to it. Like, so that's how you see. You buy some portion here. Now, maybe you can draw a horizontal line here also. Like here, you see. So you can buy second time here and third time here. So fourth time, I usually don't buy. In the initial 3 buys, you are fully in the stock now, 15, 17% position. Otherwise, the fourth buy is too way up. Like in Tata Elxsi, you say it started the move at 900 level. Then if you are buying fourth time at 6,500, 7,000, not an intelligent buy. Usually in technical analysis, some traders will buy here also because they will exit at the stop loss, but for investors, not recommended because you are now holding 15, 20% of your portfolio in a single stock. So this is an uptrend, a basic chart of an uptrend. You just call a very naked visual analysis will do.
2 questions over here. Firstly, when you said on the diagonal sloping line, what made you decide that whether this should be a 10% allocation, matlab stock, just purely on the chart basis? First question, or matlab 10%, 5% or 15%, what allocation you should be giving? And second question is that why we only see 40 EMA, matlab why not 50 EMA or 30 EMA, or like why only 40 EMA?
First, sir, basically what happens if you're entering somewhere here, so below this you will exit. So let's say the risk is 8%. Now it's mathematics. Your trading bet should be, you should not lose more than 1% in a single bet. Not more than 1%. So if your stop loss is 8%, you can build a size of 12.5% mathematically. Because 12.5% position hits 8%, you lose 1% of your capital. So if you're from entry to your exit, if stop loss is 5%, maximum you're allowed to go 20%. So if that 20% size hits 5%, you are out and lose 1%. So that's why we then divided it in pieces. 20% I can go. So 10 I will buy now, 5 if it proves itself. If you are a daring trader, aggressive investor, you can buy 10 at the next spot and you are done. But 10, 5, and then 2.5% like this, we go up. So that's how you decide the position size. Risk depends on your personality. Like if you are conservative, aggressive, if you are like conservative investor, then stop loss 8%, allowed size 12.5, you will start with 6.25. Let the stock first prove itself. Even the management doesn't know what will happen after 2-3 years. They give a general commentary. So same in here. You don't know what will happen. So if it starts proving itself, then you slowly increase the allocation. There is no fun fixed way. Many methods, many books recommend many different strategies. Like some books say, when it moves up 2% from your buy price, buy more. So 2% is nothing from your buy price. So I don't recommend that. So that's how we decide the position size. 40 EMA is 200 days moving average. Earlier, there were round numbers being followed. We have an answer of why 21 days is being followed, because they were trying to capture the 1 month cycle. Similarly, we have 63 period. These are Fibonacci numbers. So round numbers, they were interested in 50, 100, 150, 200. Technical analysis is all about behavioral finance. Like most people following the same thing, that's why it works. So 40 became too popular, 200 MA. Otherwise, you won't find an answer why 200 days MA. 200 is roughly a good number, or the 40-week MA. Very clearly, sir, 40 on weekly chart is 200 days, because 40-week moving average. If you use 40 on month, you will be destroying your all portfolio, because 40 month is 40 multiplied by 22, which is roughly in 1 month, 22 trading days. So that's how you get 200, sir. So very popular, everybody uses it. So that's why it works, 40 MA based on behavioral finance. So this is the example of an uptrend. So we're discussing only the price on the chart. You see when it is moving up, you see when it moves up, see the volumes in here. The blue is when the price moves up. You see, when the price moves up, look at this big volume bar. I think it's related to some MSCI rebalancing. I got the news. But anyway, you see, whenever the price moves up, you look at the volume on the chart. And whenever the price falls down, there is no one exiting in here. No volume in here. So these are the institutional entries, right? So that's what Sir William O'Neill writes in his book, How to Make Money in Stocks. This is not your neighbor Aunt Susie buying the shares. This is not your 100 share buying. This is the entry of some strong hands. When the price moves up, you look at the volume. So that increases your conviction. Only price and volume chart. That, okay, institutions or maybe the strong hands are interested here. That they will propel the stock up. Just as like the rocket needs fuel to take off, you need volumes for the stock to take off. So role plays by volume is very simple. Price moving up with strong volume must catch your attention. Weekly chart, 5-year chart, and there are 2014 listed companies on National Stock Exchange. So once on weekend, I personally go through all the charts. If you can do that hard work, maybe, or if you are just interested in 750 names, Nifty 100, Nifty 500 plus Nifty Microcap 250 is what I recommend. You must track weekend. It only takes 2.5 hours to check all 750 charts. Flip it, and immediately your eyes should go on the price and volume action. So when price moving up, volume is very high, it must catch your attention. The stock must come into your watch list now, and then you will start exploring the story behind it. So that's one way to scan the charts. So Phenotex Chemical was one example in here. Weekly chart. This was, I think now it gave the exit, or maybe I'm not sure. I haven't seen the updated chart again. So you see here, the stock never gave you exit sign throughout the journey. It started almost around at 40, 45, or you can say this was the COVID fall. It came back up. Now from 34, this is in the month of November, and then moved till 400 level. So you have to then protect your gains only. So moving average, I explained you, this is the latest end period closing. 40-week means the closing average of the previous 40 weeks closing price average. You basically are smoothing the price. That's what we call it, smoothing. So moving, it's called moving because as the 41st day will be added, first will be removed. 42nd day, second will be removed. That's why it's called moving. It's used as a trend filter by all the fund managers also, with whom I know. Like anything below this 40 MA, they consider it to be bearish. The moving average, if it is sloping down, then not worthwhile to consider it. Moving average, like you see plenty of beautiful chart, Varun Beverages, Indian Energy Exchange, so many examples in here. When the moving average is sloping up, price came up, you make good money in that during that piece of trend. Why to sit or pick a stock which is heading down, right? So exponential moving average is nothing. There are many moving averages, Hull moving average, exponential, simple, Wilder, parabolic, SAR, many moving averages. Exponential means in the calculation part, you are giving more weightage to the recent data. In simple, you are just taking the simple average of all 40-week closing prices. In exponential, you are giving more weight to the recent data. So this is Bombay Stock Exchange chart. See the very beautiful chart. You see the price heading down. You are not interested. See the moving average sloping down. You are not interested. It tried once here, fell back, but there is no signal in here. You see the price forming lower high and lower low pattern. This is the basic Charles Dow theory. This is the COVID fall. The stock went back up, fell down again till 40 MA. then went back up again. Now here also I may have entered here, but I waited because you see, this is the swing high. You can enter here also somewhere, but now you see, I am clearly waiting for the breakout above the, we call it breakout, when the stock crosses the resistance level. Resistance is where the stock faces the selling pressure of the old buyers who are trapped in the stock. This is the definition of resistance. So now you see here, the stock came out, now you buy. Now it's the right time to buy. MA slopes up, and then you went up till here. Now this is selling climax. We will discuss it, selling climax. You look at the volumes in here. Even before you enter, you see the volumes in here. That it must catch your attention immediately. So you see, when the stock falls down in here, look at the volume part. No selling in here. When the stock comes back up, look at the volume. This is not retail entry. Retail entry is never united on a single day, right? So
you talked about the entry before the arrow.
in here,
Yeah. So,
I may have taken, but I am waiting for the clear-cut direction. I may miss the initial move, because if I take entry here, there is a resistance sitting out in this zone. So I will not take entry in here.
but suppose if you took entry
Yes, sir.
and then the stock went down.
Went down, I will be exiting, because this low is my stop loss, this week's low. Because
So,
if I take entry here, I would be exiting below this level. But you see here, even this level, the stock didn't close below this level. So
will an exit come? If you took entry there,
if you take entry here, your stop loss would be in this sum zone, in here, in this zone. So even below this, the stock didn't close it. So if you are following the trigger basis stop loss, there are many methods of stop loss. Trigger basis, your level touched, you are out. One is closing basis. I don't recommend closing basis for heavy position. If your position size is 15%, 20%, you are waiting for the price to close below this level, then you will exit, then you will lose money if it is a free fall in those cases.
the entry, if you took before the arrow,
Yes, sir.
did an exit come?
Yes, sir. Exit will come, because it's more than, I think, 10%, I think, more than 10%, maybe 250 to almost 100.
So
18.
again, only if you are interested in the same stock, will you take entry at
Yes.
the arrow level?
I always have a separate watch list of deleted stocks. They will set up again once. Karur Vyasa Bank is the recent example, just last week. Went down till 94, 95, I think, and then shot up again. So this market is a very good market for you to learn shakeouts. It's throwing out the daily traders out from the stock position. Only the serious one will be able to hold their stock now. So now you see this chart. GHCL was a live example when I shared on Twitter that time. Actually, I'm not going deep into it. I alerted at that third. Here I alerted because here was the signal coming in. You look at the red bar volume. Whenever the stock now falls down, the volume is very high. Now what happens? Sometimes what happens, we will think this blue bar is a buying interest in here. So you see this blue bar, you will think this is a very strong candle. You have to combine it with price. Price didn't close strongly up. This is, I think, this area. You see, no candle is very strong. If this is buy, see, blue and red is your fixed color. It is just number of transaction between buyer and seller. If price moves from 100 to 115, 15% up in a single day with a strong volume, that means buyers are very strong. They are getting into a stock. But if you see this big volume bar in here live, you see the price didn't close strongly. So this is a clear signal despite these number of shares. Who is buying? If the price is not moving up and still you see, this is clear case of institutional dumping. So you'll be practicing on the chart with price and volume. So this is where I was like posting this chart. Now you have to stay alert in here. But as an investor, will you exit? No, you will not exit because you have a clear sense of rule written. So, but you get a fair bit of idea now. There is an alert level set here. You see, where you see here, price moves up. Look at the volume. Now, I am interested here. You see, price Can you see this bar? Candle. Price closed strongly up. Look at the volume. Why? What happened in this case? No buying whatsoever. You see the price rejection from the top, right? In this case, GHCL, previous one, sir. I think I pressed it. So this is how you analyze the price and volume combined together. Volume should be high, but simultaneously price should be closing near the upper end of the range. The bar should be stronger one. Candle should be a thick body candle. It should not be that the price is getting rejected from the top. Now it will appear, even if the price closes 1 rupee above, it will be a blue bar. But it is a case of selling, institutional selling. So this is Tata Power still at the same range. Now this was the recent example, sir. Very recent example. You see the buy point, then the story came in of the charging stations. Then the stock made a move. Now I am closely monitoring it. Because what happens here, now I'm not discussing the chart pattern. Otherwise, this is my breakdown level. If it closes in here, I'm not holding it now. I already exited it. But if I would have been holding, I would have exited as per the investing rule somewhere here. I will get out. Because now you see, this is the live example. If it moves up, it's strong. But for investing perspective, how many weeks have already passed by? I think a lot of weeks. Same with Loris Lab also. Same chart. So this is the live example. So in case there is a breakdown, but for investor like 40-week MA, I would be exiting somewhere here as per the rule. Okay, this was the example in here. So you see here, exit somewhere here. As per the rule. As per the rule, exit somewhere here. Now you see the slope. I mean, when you exit, still everything is okay. If you say me that volume is not so high or price, you say the MA is also not sloping down. But as per the rule, it may move up. You may buy it again when it breaks out. But after this move of 500, 600%, it is too rare for a stock to repeat the same story. So now you would have saved, I think, 1 year. Again, that's in hindsight anyways. But I posted the chart here when I exited at 545 was my exit point somewhere here. So that's how you trade, invest based on chart pattern, and exit criteria you must have. 40 MA. One more thing, this point you must note that April, it moved up in April. So this was COVID correction. So this is the way of picking stocks. After every bear market or correction or a crash, any stock that moves back up quickly is the next leader. Sir, very, very important basically. This was the COVID fall. Within 1 month, the stock is back to the high. Loris Lab was in the 52-week high list. In April and May, alkyl amines was the next one. Then slowly other ones start coming in. Dixon Technologies, Balaji Amines, Tata Elxsi, they start kicking in. So now you see, within 1 month, stock back to new high. So this should be giving you signal that something is cooking up in the business. So after every bear market crash or correction, the stocks that come back up to the same high will be the new leaders. So relative strength is a very simple concept that your stock is outperforming against a benchmark. Benchmark can be Nifty 50. If you invest in Korean market, you will be taking the KOSPI index and you will be checking in past 3 months, whichever stock has performed better than the KOSPI index, you will be having that universe of stocks in your watch list. So there is a book written by Sir William O'Neill, which explains, I think on page number 189, he has done enough research on the RS strong names. And he has mentioned that RS usually, it's his proprietary rating. So let's not get deep into it. But RS, you get an idea that if Nifty moved 10% in past 3 months, your stock should be moving more than 10%. So you will maybe do this filtering every week. On every weekend, you will scan for those stocks that are performing better than the benchmark index. So you get a list. Now you will ask me, Tata Elxsi, let's say you got in this list. I think in Tata Elxsi came up in this list at 700 or 750 level. So still you will be getting that name in that watch list, and sometimes those stocks will keep on outperforming for another 1 year or 1.5 years. They make the entire move. So relative strength is one of the best way to pick stocks. You have to select the stocks that are performing better than the benchmark for the past 3 months. Now, when you do this exercise for the first time, you will see many stocks have already made a move of 200, 300%. But when you do this regularly, you will be focused on the list. Immediately, if any new name enters the list, you will be aware now, okay, now it has started performing better than the market. Same was the example with Mazgaon Dock or Kochi Shipyard. So the GRSC, GE Shipping, they started coming up in this list, performing better than the benchmark. And when you scan, so you can read there, that's the one of the wonderful book written by Sir Richard Love, Super Performance Stocks. I think chapter number 7 on RS. Otherwise, it's much inclined to the political cycle. Robert Levy, one book, Professor Narasimhan Jagdishan. This is a research paper written in 1993, and this PDF is available. All the PDFs are available freely on internet. Sir Meben T. Faber, Relative Strength Strategies for Common Sense Investing, 24 pages PDF research paper, where he explained that if you scan stocks based on 1 month, 3 months, 6 month, 9 month, 12-month performance, all have performed better than the benchmark. The portfolio designed based on that. So 1 month usually is a short time, because sometimes due to news, any stock may move up 20%, 40%, it will pass your scan. But 3 months is a pretty fair bit of, will give you a pretty fair bit of idea on those stocks that are performing than the benchmark for the past 3 months. So you get a universe of important stocks. The top 20%, top 30% stocks you can focus upon. Relative strength index is an indicator basically. It compares the strength of the stock with respect to the same stock. Relative strength compares the strength of the stock against a benchmark. Nifty. That's relative strength comparing with the benchmark. If you are comparing with itself, RSI mentioned by Sir Wells Wilder in 1978 in his book RSI, is comparing the strength of the stock with respect to the stock itself for the past 14 days. There is a formula of it, 100 minus 100 upon 1 plus RS, up by down, not needed for traders, for investors, not needed, RSI. So these are the books you can read. Richard Love, Super Performance Stocks, and one Indian version by Sir Prashant Shah, so Outperforming the Market. So you can read this book for relative strength. Next. So what is RS? I explained to you that in how can you, God forbid, if there is a crash, maybe 4 years later, 5 years later, how can you scan for the next leaders? The stocks that will be coming back up to the high quickly, they will be the next leaders. Same in American market, same in Indian market, same everywhere. So this way you can increase your odds of picking the next leaders. Same was the chart of Loris Lab. Then Mirza was one. Then you see Dixon, alkylamines. You open their charts and see when they quickly came back up to their highs after the COVID crash. Balaji amines, then Tanla platform. There were many names. Tanla was little late, but many names before that. Loris Lab was, I think, the quickest one. On 23rd April, 23rd March was the lockdown. If you open the chart on 23rd April, it moved back up to the same high. Next. So it's a summary, basically, price volume 40 MA on weekly charts. You can follow a simple line you can draw and you can make money. So no need of fancy jargons. So a strong moving up stock will give you entry either diagonally sloping down or flat. If it is sloping up, it's a risky bet. You cannot enter because there is no right point to enter that stock. And relatively stronger names, you can be picking up your universe. I think top 20% will be 300 to 400 stocks. Out of them, 200 to 300, I think 100 to 150 will be circuit names, like Expro was one, Electra Green Tech. They were in the list for a prolonged period of time. Then there was one BCG, I think BCG group, or one stock which moved up 20 times from 10 rupees to 400. So there are many stocks like that you can ignore. If they are circuit names, you can build on, you cannot build on big size in them. So next. So these are some chart patterns I discussed before also on one webinar with Ishmohit. Next. So you can read these books on chart patterns. Basically, if you are interested, you can learn about them. There are chart patterns that give you entry and exit signals. There are four. Next. So there are four broad categories of chart patterns: head and shoulder, cup and handle, rectangle, and triangle. So this forms along the journey of the stock. Not every time you see the chart pattern on the chart. So don't force a pattern if it is not there. So head and shoulder pattern, cup and handle, head and shoulder. So this is head and shoulder pattern. Your stock is forming higher high and higher low. I mean, for investor, you just keep it very simple. Like I said, if the low is broken, you get out. Or if the 40 MA is broken, you get out. Not for you. I'm just giving you a broad idea, like you can explore this field of chart patterns also. Like you see, your stock is forming higher high and higher low, and suddenly it starts forming. It fails to move back up to the new high. So this is an alert sign, so that before even 40 MA is breached, you are knowing that this stock in your portfolio is now weakening. Like Tata Power example I shared, or Laurus Labs example I shared. So this is the gap. Don't go deeper into it. It's a breakdown. For you, it's exit. Next. So Acrisil was one chart where you can see the stock actually in head and shoulder pattern. Your exit will be definitely, you are an investor, either the breakdown of the swing, because once it moves this high, you will moving up your stop loss somewhere here. So if it breaches this level, you are automatically out. So even without knowing the pattern, you know what is head and shoulder pattern. Your stock, all I am saying is that on the right hand side, the stock fails back to move up to the new high, and you get alert. Only this you can do. You cannot sell it, because many times stock will spend time and again will gain strength. Tata Elixir at 5400 level. It was a false, head and shoulder. I mean, it didn't break down. It started moving up. Same with Adani Green chart. So many examples. So you will exit only at the breakdown, at the confirmed signal. Next. So Dabar India was one example. Next. So these are all examples. Nykaa, I think it was born as a head and shoulder pattern. See, the stock failed to move back up to the new high. And this was, you can call it false breakout also, but very short period of time. Now came back down, then not a buy. So next. So this was a Nifty financial service index, when the financials were weak during that time, November 2021. So this was Nifty 50 index when the correction actually started somewhere here. Open the chart of DMart, IEX, Balaji Amine, Deepak Nitrite. Open those charts. See the price action in the third week of October. So third week of October, IEX, Deepak Nitrite, DMart, CDSL, all had that selling climax top, coincidentally. 1 month after the big Amazon breakdown in US market. Amazon broke down in September. Then third week, not a coincidence, the selling climax in all the stocks at the same time in October. So if I go deep, there are ways to identify them getting too close to the market top. 6, 7 parameters, 8 parameters. So this was one selling climax, false breakout. Again. So next. So Nasdaq 100 or one chart pattern, head and shoulder, same time as Nifty, correction began. Next. Anthony West handling cell. I don't have the updated chart as of now in the PPT, but you can scan for it. Next. So this was Johnson & Johnson. I charted it completely that time. This was inverted head and shoulder, and there was a head and shoulder breakdown at the top. Otherwise, no need to go deeper. If you're an investor, no need. If you're interested, you can explore. Otherwise, fine with just price, volume, and 40 period moving average. Next. So Pidilite was one chart. Next. So DMart, again, the climax move. Third week of October, 21st October, 18th October, third week of October. All the charts, IEX, CDSL, DMart, Deepak Nitrite, from 3000 to 2600, 2800. Same week, all the charts. This was the signal. Second signal was exhaustion gap was filled on Nifty chart. And then many stocks broke down. And then after that, in 1 or 2 weeks, false breakouts, on many charts. And then RSI divergence, then so many parameters in there. Advanced decline ratio we use. Like how many stocks ended in green, how many stocks ended in red, advanced to decline ratio as a market breadth. Only if you are following it regularly, you will understand. Only in 1 or 2 days, you won't get it. Market breadth. Then number of new highs and number of new lows, this ratio. This is called a Norman Fosback indicator. No need of that name, actually, no need of the name. But keep an eye on how many stocks are making new highs in the market. You will sooner see 100, 140, 120. But when the market heads near the top, number starts coming down. 80, 90, then 60, 50. one parameter. Then number of stocks above 40-week moving average. We call it number of stocks above 200 MA. They start coming down. 50 MA, number of stocks above 50 MA. In the month of September, 473 stocks out of 500 were above 200 MA. 473. 473 stocks above 50 MA. 413 stocks above 200 MA out of 500 in the month of September. 1 month later, October, 200, 250. Last week of October came down below 50 MA in November. So these are some tools which you analyze to get in close to the top. Next. Camlin fine size was one example. Otherwise, if you are an investor, your 40 MA will be somewhere here. So you will be exiting, I think somewhere here maybe. Next. Inverted head and shoulder is thus reverse of head and shoulder. BSC, someone said it's an inverted head and shoulder. Same chart. Next. So Datadog in USA. Next. These are all examples. Your stock basically falls down. It stops forming fresh low and breaks out. So this was a false breakout in Jubilant Food. Now it's at 535. So next chart. So Anaconda Copper was one chart picked from Sir Edwards and Maggie book. 1932 classical work. This is the head and shoulder pattern. Why I shared this? You see, it's already in an uptrend. Then the stock forms inverted head and shoulder and breaks out. As an investor, you will add some here. Why I shared this? Because there is a myth that inverted head and shoulder pattern is formed only after a downtrend. No, even the stock is in an uptrend. Loris Lab near 250 to 270. You can check the price chart. Inverted head and shoulder pattern in Loris Lab chart. So you buy again when it breaks out. Next chart, sir. Maruti Suzuki was one example recently. It went till there. I think went till some 95, 9600. I don't remember exactly. Now back again. Next chart, sir. Sonic Healthcare is the Australian stock exchange. Like we were analyzing this. I was hitting inverted head and shoulder. See, already in an uptrend. Then the stock falls down and again it breaks out. So if it breaches 40 MA, I will be out. If it moves back up again, I will buy this stock. So this is Sonic Healthcare. Next chart. HCL Tech, very simple. The previous example, inverted head and shoulder. Next chart. Everest Canto Cylinder was one big inverted head and shoulder. You buy somewhere here. And then you see it made a move, very strong up move. And then same exit criteria for you, like we discussed. Next chart. This was a brilliant chart. This was actually, I came on Twitter for the first time. So I bought it around at 65 rupees. Somewhere here I'm buying. So what happened usually? In here, you see downtrend, 40 MA, I didn't plot, see the inverted head and shoulder. And then here the story started kicking in of charging stations for Tata Power. Then the stock made a move of 270, 280. So you see, now many times fundamentals start coming in later and the price makes a move initially. Next, sir. Ujjivan Financial Services, this chart I shared, on Twitter. Inverted head and shoulder pattern, very strong breakout it was that time. Volumes were kicking in. Now here you see, when I was analyzing this chart, this has history of false breakouts. Like many times it will move up 40 MA, but that's the part of investment. You have to take a bet. And this time volume was also not very high volume. So it was just a 5% position, not more than that. After it starts proving itself. So now you see, you will see plenty of cases like this. Volume not high, price more making a move. You can maybe start a pilot position if you have that stock in a watch list. So then it started proving itself. I think somewhere here now it is 250 or somewhere 300. Next chart, sir. So next chart. So this is the failure pattern. The stock fails to see. That's what I'm saying. Do not exit unless your system says you to do so. System will say only when 40 MA is breached or your stop loss is hit. Otherwise, no. You see here, Bank of Baroda again regained strength and moved till again 180, 185. I think the closing is 188. So Bank of Baroda. So touch for investor like 40 MA closing will not do. I think might not have breached 40 MA. This line. Yeah, as an investor, like you will wait for the closing. There are many methods. Trigger basis, it is triggered, you are out. Closing basis, Closing basis, I don't recommend if the position size is too heavy. Then the other method is average base stop loss. You will exit at 100. You have 900 shares. Stop loss for 300 shares at 105, for 300 at 100, for 300 shares at 95. So if the stock hits and moves back up, you still have 1/3 quantity. This is average base stop loss. One would have exited for the trigger basis somewhere here, but it depends. I haven't drawn the 40 MA. Where is the 40 MA? I don't know exactly. Tata Motors, what that see this was a failure of inverted head and shoulder. Anyway, if you're an investor, your 40 MA would be breached. You would be getting out. I don't know which MA. I think this is the 200 MA. This was the Tata Motors trade. So inverted head and shoulder. Only chart patterns are important. Like when, if you can go through 1 or 2 books, it will be better. If not, then simple method that we discussed. Next, sir. Next, this was a fall, and this Tata Elxsi. This was the failure of, it can be ascending head and shoulder or descending head and shoulder pattern, or a complex also. No need to go too deep into it. Next, sir. So next, these are examples you can study from the PPT. There are many. Next, sir. So this was Adani Green. Then Tesla, I think it went down. Cup and handle. Next, sir. So this is a very profitable pattern, the most profitable pattern, because it is very simple to spot, and it signifies the shift of the stocks from the weak hands to the strong hands. That's how accumulation is done basically. So the stock corrects. Those buyers who are trapped, they will wait for their own price. Some fresh shorters are there. They will short it. Now the stock corrects. And here, those who miss the bus, they will be buying. There are plenty of market participants playing here. And because of their buying, the stock moves up. Some shorters will cover their position. The stock moves up. And now you see the stock will face the resistance again. But one thing important for you to note, the stock didn't move back to the same low. Stock moved till resistance, but it failed to move back to the same low. So it went back up from here. So this is the healthy sign on the chart. So anyway, if the stock breaks out, you have to take an entry. So next, there are many examples in here. You can continue. Next, so many in there. Next, Triveni. Next, so many. BSC was one, then Polyplex. Next, I think Ishmohit will share the PPT, so you can see the chart patterns. All are like just the chart patterns. Next, sir. So this is the triangle pattern, very difficult pattern to trade. Next, very difficult pattern to trade basically because it penetrates the lines too many times. You can read it. Triangle pattern are basically, there are 4 broader themes of chart pattern: head and shoulder, cup and handle, triangle, and rectangle. In triangle, we have ascending triangle, descending triangle, and symmetrical triangle. All three can break in either direction. If you want to read the book, there is a book written by Sir Thomas Bulkowski, Encyclopedia of Chart Patterns. He has a website also, thepatternSite.com. On it, all the patterns are listed. So ascending, descending, symmetrical can break in either direction. Then the 4th one is broadening wedge, which is very difficult to trade because it is broadening. So the boundaries separate from each other. Then there is one pattern, pennant pattern, also under the category of triangle. The stock makes a very sharp up move, then consolidates and form a triangle, a small, and then it moves back up again. So this is pennant pattern. That's why we club them under these categories. So similarly, we have rectangle pattern. Sir, next. All are these bell trade. Next, they can like cover it in. So we'll move it to the last subset. This is like the Kalbe Pharma, KPIT. These are all chart patterns. So these are all examples I have highlighted. InfoEdge was one breakdown, BPCL. So this is rectangle pattern. Same, the name suggests that there will be a rectangle consolidation. You have to buy above the line. Titan was breakdown that time, Adani Green. And Zebra Technologies in NASDAQ, Gujarat Alkalis. This was one, not so clearly. Sanyo Homes is the Taiwan Stock Exchange company. I don't have the updated chart. When I was charting, this was a very, very long rectangle pattern. So rectangle has a subset, double top or triple top. One example, sir, next one. So rectangle pattern, if a stock touches the same level 2 times, fails back to new high and breaks down, double top is completed. The myth, no, not the myth, actually the mistake is the stock touches the boundary on the top second time, people call it double top. Double top is never completed unless the stock breaks down. Because unless it breaks down, how do you know it is a double top? It may fluctuate in rectangle or maybe form a triple top. Double top is the most powerful reversal pattern. The stock breaks down, you get out from the trade. The many chart. This was Nifty 50 index weekly chart. Next, sir. Apollo Hospital was one. Stock fails back to make new high. Biocon. Immediately after it gave an entry, it broke down. S&P 500 next year. Suprajit Engineering was one chart. Dollar currency index, it was a double bottom breakout at 91, 92. And it went till 113, 114. Same, I think in October, November. Same when our market also topped. Next. Cosmo Film was one next. So Amazon was the September breakdown. I think much before September, Amazon breakdown with a gap, very strong. This was the news of new CEO coming in when the stock broke out. And then you see the double top pattern and it broke down with a gap, huge gap. Next, sir. So this is NASDAQ, Costco, next. Persistent, next. Sir. Praj Industries was one double top pattern, very painful stock to trade because it had already made a very strong move. Now, if you anticipate the same 10x, 20x move, very difficult. Next, sir. Biocon, we shared that time. Apollo Hospital was one. Next, sir. Lal Petlab. This was the exit signal as per the chart pattern. For an investor, if you don't follow chart pattern, then MA and little late, but if you are understanding chart pattern, it will be beneficial for you. Otherwise, 40 MA and the swing low concepts. Next, sir. Next, sir. Just one in here. So these are the recent examples I am tracking. Now you see here, sleeping stock, Syngene International. So you can buy at that blue line or maybe the dashed line. So this dashed line will give you an early entry. But this is diagonal line are difficult to trade for a beginner because immediately when it breaks out, it faces resistance at the horizontal line. So I usually take first entry at the diagonal breakout and the second one if at the horizontal breakout. That was the chart of Devyani International. Diagonal and then the horizontal. Next, sir. Wellspun Enterprise is a recent example. You see the stock in a downtrend and then it broke out. You see the broader picture on monthly chart. Open the monthly chart of Wellspun Enterprises. It broke out. Now, will it continue the journey? I don't know, but I have to follow the rules. So I will be entering at the breakout and then will be riding the trend till it goes. Next, sir. So this is Punjab National Bank. Recent example. You see the MA sloping down. Then the stock formed a base. MA became flat. Look at the volumes. Now the stock broke out. Now the entry would be somewhere around 47, 48 level. And then now 56. Now you do not know whether it will be resuming the trend, but you can only place your bets accordingly for your watch list. Next, sir. This is Usha Martin chart. See the entry many times, very strong chart. Look at the volumes. Look at the volume. To get the entry in here, let's say you see the entry again. If you take entry here, I would be getting out because my stop loss would be hit. You see, I got an entry here, first entry. Secondly, you see, do not know the chart pattern, no problem. Now you see, second entry would be here. Third, you can maybe draw a horizontal line in here. You enter here. Again, a rectangle consolidation, stock moved up. Now it is correcting. Never a closing below 40 MA, never. And this is a triangle, symmetrical triangle. So when it breaks out, again an entry. So a very strong chart moving from 25, I think 25, 30 rupees to now 130. Next, sir. Ultratech Cement, you do not know whether it will fly up or not. It's a investment category, large cap company. Will not move up 2-3 times in a year. Very difficult, very big size company. So you don't know whether it will continue or not, but still you can place a bet as per the trend reversal criteria. Next, sir. So this is HDFC Life. See, almost since 2021, September, now 1.5 years completed. September 20, no, 2 years, no return. So now the MA will be flattened up, and if the stock gives a breakout, I will be placing the bet. So this is a live example, HDFC Life. Oh, sir, just have broader picture, sir. Uptrend, downtrend, sideways only. Don't go into stage analysis. Next, sir. In a rally gear, I am tracking it. Have not given a breakout yet. Ramakrishna Forging is one chart what I am tracking. Look at the volume in here. See, but the problem is that the price is not strongly closing. So if it breaches, I will buy. If it doesn't, then I don't have any love for any name. You have a watch list of 15, 20, 30 names. RK Forging, volume is good. But here there is a problem now. When the price falls down, when the price even moves up, volume is not too high. So this dashed line is my alert in trading view. If this level is crossed, the machine will alert, then accordingly you will be buying in. So these are some recent examples, sir. So this Gravita India, look at the chart now. This week, current chart, this week breakout. Look at the volume. See the volume in here. So here I would have exited somewhere. Then again I will enter here now. Saving this thing 20, 30 weeks maybe. 20, 30 weeks of time. So that's it, sir. So thank you very much, sir.